Welcome. In this video, we will analyze if XCN coin can be bought here. Don't forget to subscribe and like, and please watch until the end to understand. One of the most important technical structures on the chart is an uptrend pattern that is slowly starting to reveal itself. Such uptrends are very important signals that buyers are gaining strength in the market and prices are starting to move in an upward structure. Especially when we look at the recent price movements, we see that each new low is higher than the previous one. This shows that the market is generally trending upwards. Investors are starting to use declines as buying opportunities, and the market is consolidating in an upward structure. This ascending trend line is an area that the price has touched several times before and has received an upward reaction each time it has touched it. This is a very important detail in technical analysis because the more times a line is tested, the stronger support or resistance it becomes. In this context, the validity of the rising trend line increases and is a safe guide for traders. Therefore, if the price reapproaches this line, it can work as a strong buying zone again. Trend lines play a very important role in investor psychology. Especially in uptrends, investors see prices approaching this line as low-risk entry points. Because in such cases, stop-loss levels can be determined more easily, and the potential gain-loss ratio is quite advantageous. Therefore, when the price reaches the uptrend line, many traders using technical analysis prefer to take a buy position. This makes it easier for prices to regain upward momentum. Currently, the price is hovering well above this rising trend structure, and the overall outlook remains positive. However, in technical analysis, no level is absolute certainty. Therefore, a possible pullback of the price towards this trend line should also be considered. In such a case, traders should watch for reversal patterns that may form near the trend line. Such patterns can be considered as a buy signal, and the price can be expected to move up again. If this uptrend is maintained and the price continues to draw support from this line on every pullback, higher highs will be inevitable. This could be considered a strong bull market signal for investors. Moreover, if this uptrend is supported by an increase in volume, the technical outlook will be even stronger. Because volume shows the power behind price movements. If an uptrend is supported by increasing volume, this indicates that the trend is healthy and sustainable. In conclusion, this rising trend line on the chart remains an important technical structure for traders. Every time the price approaches this trend line, there is a high probability that buyers will step in. Therefore, investors should pay attention to this level and take positions according to the reaction of the price in possible contacts. As long as it stays above the trend, bullish scenarios seem stronger and more likely, especially if a positive mood prevails throughout the market and technical indicators are moving in line with this rising structure. Prices are likely to test higher levels, but we need to look not only at trends, but also at other metrics so that we can analyze well. Keep watching. A detailed look at the chart reveals a very striking and technically important structure, the ascending triangle pattern. This is a very reliable and frequently encountered bullish pattern in technical analysis. It offers high potential for investors, especially when prices break out to the upside. Looking at the current price action, we can see that there are continuously rising lows on the lower side, while there is significant horizontal resistance on the upper side. This structure suggests that buyers are becoming increasingly eager and are pushing the price upwards to break the selling pressure. The rising trend line at the lower band represents buyers' confidence in the market. Every time the price pulls back, it finds support to rise above the previous low. This is a strong sign that the market is preparing for an upward move. Investors take these rising lows as opportunities and increase their buying positions. So the existence of this uptrend suggests that the market is still supported by strong buyers and the upside momentum is likely to continue. The upper horizontal resistance level, on the other hand, seems to have been tested many times but has not been overcome so far. However, this situation is not negative. On the contrary, it can be interpreted positively. Because the more it is tested in technical analysis, the more likely it is that that level will be broken. With each test attempt, the sellers at that level diminish, and the market eventually gathers enough strength to break through it. Therefore, another test of this resistance level could herald an upside breakout. One of the most powerful aspects of the ascending triangle pattern is that the post-breakout movement is quite predictable. If the price manages to break the upper band of the triangle, the post-breakout target is usually the height of the base of the triangle. This target is usually measured and added to the price level to calculate the potential gain. If momentum builds up, especially with high trading volume at the time of the breakout, this rise can become much stronger and more sustainable. In other words, the structure currently forming on the chart looks very promising, both in terms of technical outlook and potential. In addition, timing is also very important in such patterns. As the ascending triangle pattern is forming, the price is trapped inside this structure, providing traders with strategic entry opportunities. Correct positioning before the breakout can maximize gains at the time of the breakout. At the current level, the price is both supported by the lower trend line and very close to the upper resistance line. This squeeze may indicate that a breakout is imminent. If you want to wait for a breakout, you can wait for the upper line to break. When we take a look at the RSI indicator, one of the most prominent technical structures we see is a downward trend line. This falling trend line clearly shows that the RSI value is trending downwards, making lower highs over time. This type of trend in the RSI usually indicates that there is weak momentum across the market and that buyers are still not fully dominating the market. However, in technical analysis, such trends don't always last forever. On the contrary, falling trends on the RSI can often herald a stronger uptrend. What's critical here is whether the RSI can break this falling trend line to the upside. If the RSI manages to break above this line, this would indicate that momentum has now shifted to the buyers and the pressure in the market has been broken. This is not only a move based on the RSI, but also indicates that prices could potentially gain momentum to the upside. When the RSI crosses this line, a significant uptrend on the price chart often begins, or the current uptrend gains momentum. A downtrend breakout in the RSI is a very important signal in technical analysis, because the RSI is not only an oscillator, but also a powerful tool that reflects the psychology of the market. An upward breakout of this trend line, which puts downward pressure on the RSI, indicates that the negative sentiment in the market is gradually dissipating, and that investors who are willing to buy are gaining weight. If this breakout is supported by a pattern or a trend reversal on the price chart, then it becomes an even stronger signal. In other words, the RSI breaking its downtrend is a powerful indicator on its own, but it's even more powerful when combined with other technical signals. The RSI has a trend line with 3 or more touch points, and if this line is broken, this break has higher reliability. So, if the RSI has previously touched this falling line several times and bounced back each time, and now it manages to break the same line, then a significant transformation in market dynamics is taking place. This could encourage traders to take new bullish positions. In addition, such a breakout in the RSI may herald not only a short-term rise, but also a medium-term trend change. Therefore, it is very important for traders to carefully follow this technical structure and breakout of the RSI. With the RSI breaking the trend, the market may break out of its previous period of indecision and move towards a new momentum. This technically indicates that the upward movement of prices will be supported and volumes may also increase. When this falling trend is broken, the price breaks the pattern upwards. Yes, friends, this is how it happened in this video. Don't forget to subscribe and like. Goodbye.